My name is Gabriel Alonso-Mendoza. I'm co-founder of Amvest Terraden, and we're very happy to have you join us today for a live webinar called Rare Earths, Dispelling the Fog. A special thanks goes out to our partners at Coherra for making this webcast possible. Before we dive in, a quick disclaimer: this webinar is for informational purposes only and does not constitute an offer to sell or the solicitation of an offer to sell or buy any security. It should not be relied upon as a basis for investment decisions. At Amvest Terraden, we focus on companies involved in exploring, developing, and mining strategic minerals, the essential building blocks for modern technologies, defense applications, clean energy systems, including transportation, power generation, and storage. Importantly, we concentrate on supply chains that are independent of China, helping support a more secure and transparent future for these vital materials. And perhaps one of the most vital materials that sits at the center of our technological evolution is rare earth elements, which brings us to today's topic, rare earths, dispelling the fog. Rare earth elements are back in the headlines, and with that renewed attention comes plenty of uncertainty. This sector is shaped by technical complexity, geopolitical tension, and conflicting narratives. For investors and the broader public, making sense of it all isn't easy, and today's session is designed to clear up that confusion for everyone. Think of it as an introductory masterclass that breaks down the complex forces shaping the rare earth supply chain. And so we're going to help explain these real challenges that the West faces in rebuilding its capabilities and what exactly needs to happen to move this sector forward. So whether you're new to rare earths or looking to sharpen your perspective, this conversation is meant to give you a solid footing and a clearer view of what matters most in this evolving space. So to help us answer those questions, I'm joined by my two exceptional colleagues, Stuart Macliver and Tomasz Nadrowski, both who bring direct experience in strategic mineral investment and mining project development. Stuart co-founded the New York-based Amvest Capital group of companies with me, including Amvest Capital Asset Management, where the Amvest Terraden fund sits. Amvest as a whole is a specialist investment management and corporate finance firm dedicated to the natural resources sector. Stuart is textbook when it comes to qualifications one would need to evaluate this niche sector. He holds a Bachelor of Commerce from the University of Western Australia, is a member of the Institute of Chartered Accountants in Australia, and has a graduate diploma in geology from the Western Australia School of Mines. Prior to co-founding Amvest Capital Group in 2017, he held roles across M&A, equity, debt, capital markets, all focused within the natural resources sector. Needless to say, he is a valuable resource when trying to understand the technical, economic, and market intricacies of these critical minerals. Tomasz Nadrowski is our portfolio manager. He is a seasoned expert in mining investments with over 25 years of global experience. His career included roles as portfolio manager, commodity strategist, and commodity analyst. He's worked all over the world and is fluent in 7 languages. That makes him not only a great travel companion, but also means he carries the knowledge base and the curiosity you need to become an expert in critical minerals. Tomasz is a former director of the World Economic Forum, holds a CFA charter, and earned advanced degrees from the Geneva School of Economics and Management and the Geneva School of Social Sciences. Tomasz will also be releasing a book later this year, and I think he'll probably mention that later on the presentation, but that's something to look out for as well as an audience. Following this formal presentation, we will open the floor for questions. We especially value the questions from the audience, so please submit yours in the chat function found on the right side of your screen, and I'll try to ask them in real time. With that, I'll turn the floor over to Tomasz, who will guide us through today's discussion.
Great, thank you, Gabe. And thank everyone for joining us today. We're going to take you through some real basics today, and the reason being, as Gabe mentioned, is that rare earths have crept into the headlines, and there's a big gap between those headlines we see every day and much more advanced research that you'll find from the likes of Tomasz or Project Blue, or better yet, Tomasz Krumer's Rare Earth Observer. We'll take you from the, say, elementary school to make you ready for high school entrance exam on rare earths. And we're going to ask a couple of questions here. Why does this matter so much suddenly for the broader public? How we can understand the deposits and the investment opportunity? What to do with the value chain in the West, which looks a little bit like Swiss cheese, a lot of holes in the middle. And we also look at the pricing and the possible changes to the framework. And finally, Stuart will present to you the story of the most important company in the Western value chain. So let's start with the metaphor of Emmentaler. Tal in German means valley, Emme is a river. In Switzerland, yummy cheese full of holes. That's exactly where we are right now. There's been a lot of effort to rebuild this value chain, and we care a lot. We care a lot about a product that altogether doesn't exceed 400 kilotons of annual production. And that corresponds to about over $6 billion. Why does it matter? Well, it matters because that translates into trillions of dollars of economic value. And that economic value is jeopardized and threatened by a quasi-monopolistic attitude of the main producer of rare earths, which is China. Out of those 390 kilotons of annual production, we tend to care most about neodymium and praseodymium, about 45 kilotons, of which just one operation in China represents a quarter. All the Western production is less than that one operation, just to illustrate the problem. So let's just step into this, starting with the inevitable periodic table. Rare earths are 15 lanthanides and 2 non-lanthanides. The green ones, scandium and yttrium, are non-lanthanides, but they're found together often, geologically associated with the lanthanides. There are many ways to understand these elements. First of all, we have to dissociate between the light and the heavy rare earths. What makes something heavier? Well, the atomic weight, of course. There's a certain gap in the middle. You'll find here promethium gap. Promethium is something that doesn't really exist in nature. It can be generated through uranium fission of some other processes, but the half-life of that element would be at the longest in one isotope 17 years. So it doesn't stay with us long enough. Of course, there are other elements that have much shorter half-life, but this is the one in this group which is the shortest. And so to the left of this, you'll find the light rare earths, to the right of them, the heavy ones, and the 2 non-lanthanides, which are scandium and yttrium. If you listen to junior mining companies, they often promote their projects by talking about magnet rare earths, referring to 2 light ones, praseodymium and neodymium. However, many others are also magnet rare earths. Indeed, most rare earths are magnetic, with the exception of the lightest and the heaviest of those, the exception of lanthanum on the light side on the left, as well as lutetium and the 2 non-lanthanides on the heavier side. That heaviness is also reflected in the melting point, which is higher to the right hand of this chart. You'll find also here the green ones, which are very abundant. So lanthanum and cerium, the light rare earths, are very abundant, to a lesser extent neodymium as well. What does it mean? It means that if you're trying to focus on mining of something that's on the right-hand side of that chart, you'll find yourself over-mining or overproducing something to the left-hand side. So if you're trying to produce, say, dysprosium, which is very valuable, heavy rare earth, you probably will overproduce neodymium. If you're trying to produce neodymium, you will most likely overproduce lanthanum and cerium. This is a problem. It's a problem for cost. This is a problem for a mining operation. It's a problem when we're trying to bring back mining to the west, mining of rare earths. Not the only one, but one of many. And so what changed this year in April is that China decided to enlist 7 of these elements to its legislation that calls dual use control. So there are different lists. Dual use refers to materials that are possibly used for defense applications. These are the red ones here: yttrium, scandium, lutetium, dysprosium, terbium, gadolinium, and samarium. That changes the game quite significantly, because beyond the problems with generic magnets, for which you sometimes only need neodymium and praseodymium that replaces neodymium sometimes, some of these are critical. Some of those heavy ones are critical for high performance magnets. So a couple of words about magnets, because this is what we all agonize about. There are several types of magnets, and there's been very little commercialization of new types in the last 40 years. In fact, the most performing rare earth permanent magnets, the neodymium iron boron magnets, have been around with us since 1982. They are the strongest magnets that there are in terms of their energy density measured by what you see here on the right hand side, MgO, which stands for megagauss Ørsted. Megagauss Ørsteds measure the density, which is maximum value of the product of magnetic flux density and magnetic field strength. And those sintered magnets, which are the child of powder metallurgy, have the highest strength. Much less strong are samarium cobalt magnets, which are, however, important because they perform very well in high temperatures. So for certain type of applications, for example, in aerospace, they're of vital use, but they only represent about 1% of the value and demand for magnets. Most demand is dominated by those neodymium iron boron sintered as well as bonded magnets. The bonded magnets are usually molten together with some polymers. So why do we need those magnets? Why do we suddenly obsess about it? Well, we obsess about it because electricity is with us, whether it's fossil fuel based or not. And right now we are in a bit of a crossroads in terms of the future of fossil fuels. Electricity will be needed, and electricity will need magnets. And of course, every season you have a different flavor. One day it's about wind power, one day it's about electric vehicles, big consumers of rare earth permanent magnets, one day it's about humanoid robots. I think there's an easier way to understand it if we just look at transducers, because it's a transducer world. What is a transducer? Transducer is a device that transforms or converts one form of energy into another. Many of them need rare earths, and indeed rare earth magnets. The red here on this chart are rare earth magnets. You can divide transducers into 2 or 3 different classes. There are those that are inputs, those that convert some of the physical phenomena into electric signal. So for example, in sound, this would be microphones, photodiodes and light, pressure, strain, temperature. But only dynamic microphones really need permanent magnets, because they need a magnetostatic field to generate electric induction. There's a lot more, as you see on this chart, a lot more use of rare earth magnets for output transducers, especially actuators. Actuators which use electric energy to generate mechanical power. And within those actuators, you find that those that really cannot live without permanent magnets are those that are based on rotary motion. So for example, motors, most permanent magnet motors, those that are not based on induction, are fit in their rotors with permanent magnets. Of course, there are other non-rotary actuators, such as magnet-restrictive actuators. They are based on the fact that certain materials change their shape when they're exposed to a magnetic field. And by the way, some of the input-output transducers, such as sonars used in submarines, for example, are also very big magnetostrictive devices, but they don't need magnets. They need special rare earth alloys, for example, terphenol D, which is an alloy of two heavy rare earths with iron. Now, of course, there are other output transducers that also need rare earth magnets, generators that do the opposite of the actuator. So they use mechanic power, say dynamo, engine, or turbine, into electric power, as well as loudspeakers. Transformers, on the other hand, which need to change their magnetic field, they won't need a fixed permanent magnet. Now, this is the main concern, because about 40%, 44% of all rare earths go into magnets, but there are also other uses of rare earths, and we should not forget about those that are not related to magnets. One important one for light rare earths is fluid catalytic cracking. That's for heavy hydrocarbon molecules that are cracked with cerium and lanthanum into lighter products, olefins or gasoline and so on. Cerium oxide, also light rare earth, very important for semiconductor production to wash the wafers. And there are a lot of applications in optics, not only in lenses or absorption of infrared wavelength, but also in optoelectronics, especially in phosphors. Phosphors transform some form of radiation, say X-ray or electrons, into light, and so very useful for light-emitting diodes, for displays, for medical applications, and so on, especially europium, terbium, and yttrium here. Small by volume in terms of demand for rare earths, but very large in value. And among non-phosphorus applications for optoelectronics, lasers are important, especially yttrium, aluminum, garnet, which can be doped with neodymium, another rare earth, as well as lutetium, aluminum, garnet. And there are other applications such as non-magnetic alloys, aluminum, for example, with scandium, magnesium with neodymium, and so on. And indeed, there are new applications coming all the time, at least for quantum computing, some of them related to optoelectronics. So now let's just go a little bit through this alphabet soup of rare earths, because they come in plural. We always speak about rare earths, not only because there are 17 or at least 16 plus promethium rare earths elements, but because they come in a variety of settings, geological settings, especially minerals. I mean, here on the left-hand side at the bottom, you see a list of about 25 different minerals in which you can find them, and this is not an exclusive list or exhaustive list. There are actually more of those. In addition to this, those minerals appear in a variety of deposits, very different, falling into 5 very broad categories, and I'll come back to this in a moment. But this, if you do a permutation of all of this, if this was possible, you're going to come up with well over 3,000 different possibilities between those elements, minerals, and deposits. Not all will be possible, because not all minerals appear in all types of deposits, and not all have more than just traceable presence of certain elements. So how can we think about rare earths? And I propose to do something a little different today than usual, because let's imagine this category, the semantic category of rare earth, something that Eleanor Roche was working on in the 1970s, picking up on Wittgenstein's notion of family resemblance. So there's a category. Imagine any class of things that you can think of. Let's say a bird. So visualize a bird in your head, and most likely you did something like this. So it was probably a sparrow, a robin, a dove, or something similar. But that's not the full category bird. In fact, there are many other birds about which you probably didn't think when you visualized that central figure in the category. So in that category, there's something more central, and a penguin is peripheral. And we can sort of visualize from the perspective of market needs, different rare earths from that angle. For a long time, neodymium and praseodymium appeared as central. This is what promoters of junior miners will also tell you, well, this is what we are looking for. This is what we have found in this deposit, and this will be our product. With dysprosium and terbium as those dopants for higher performance sintered magnets being somewhere close to the center of the preoccupation, and the rest being somewhat peripheral. What China, however, did back in April is reshuffled those priorities. And today, we see that dysprosium and terbium and heavy rare earths in general, as well as those two known lanthanides, become much more central to our preoccupations, with the lighter rare earths being somewhat peripheral. Now, this becomes problematic because it doesn't really correlate very well with pricing of these materials. So terbium sells at about $1,000 per kilogram, dysprosium 200 something, lutetium and scandium in the 700s. But samarium, very valuable, not least for aerospace or defense, sells at $250, less than $3 per kilogram. Gadolinium in the 20s, yttrium, I think $7 per kilogram. So there is no clear correlation between the centrality of the concern forced on us because of the dual use legislation introduced by China in December of last year, which follows an export control law of 2020, and the actual pricing of these materials. So that's one problem with rebuilding the value chain on the upstream side. The second one is that each deposit is different. This is just a comparison of two deposits. On the left, we see the famous or infamous, if you wish, Mountain Pass in California with its composition. Apologize because the colors don't really correspond between the two pie charts, but if you can read the codes, then most of the deposit is dominated by cerium and lanthanum. So both of these sell at around one of this, less $1, the other the dollar per kilogram. That composition means that if these were all separated oxides, they would in situ represent about $13 per kilogram. And we compare it to a deposit in Namibia called Lofdal, which is all but controlled by Japan at the moment, although still represented by a Canadian junior. This is a very differing xenotime deposit, and here the dominant rare earth element is yttrium, which is actually quite common for xenotime. So yttrium xenotimes, this is almost, more than half of that composition. More importantly, the third largest component of this deposit is dysprosium, the highly valued dysprosium. I mentioned over $200 per kilogram. It's 7%, over 7% of the deposit. You compare to the left-hand side, and that pie chart shows it's only 500 ppm for deposit. So for the same, if it was the same size, then 1 kilogram of Lofdal material would be valued at $52. Now, how can we go about it to understand those differences? Well, first you have to actually pay attention to minerals in which those rare earths are embedded. There are, as I mentioned, over 25 of those that I can count, and probably more, but really 4 that are dominant, and even fewer currently operated for rare earths. So the first one important to remember is apatite, which is a phosphate mineral. You see a list of different operations or projects, rather, on the left-hand side on top. This is historically also mined often for their phosphorus content. The most well-known is probably Nolan's project in Northern Territory in Australia. But the only one that's actually producing is a Russian deposit in Murmansk Oblast, Lavoisier in northern Russia. Others are kind of inching towards production. The second one here, monazite, is important because until 1964, most of rare earth production came from monazite. It's problematic because it's often associated with radionuclides, especially thorium and uranium, for which you need to have a lot of different permits, not only to produce it, but also to transport it. The most well-known deposit here is Mount Weld, owned by Lynas in Australia. There are a couple of others, some of them advancing towards production. Bestnazite, further below, has less problem with thorium, but also fewer of those valuable heavy rare earths. And the world's largest producer of light rare earth, Bayan Obo mine in Inner Mongolia and China, falls into this category, as does Mountain Pass in California. Now remember, some of those minerals are just the dominant minerals, right? So Bayan Obo will have some monazite, Mount Weld, mentioned before, in addition to monazite, will have some apatite and so on. Xenotime on the right-hand side, here we have much more of those heavier earths, but also sometimes mixed up with monazite, which comes with some radioactivity, hence potential problems, but also some of the most promising heavier earth producers are in this category. Eugelite, which is one of the most complex, not very successful so far in terms of production or even approaching production because of problems in processing this. So right now we actually do not have any production from this, although there are elements of eugelite and Kola Peninsula that I mentioned before, which is really a cornucopia of various minerals in northern Russia. And there are others, including laperite and chevkinite in Bahia in Brazil, very interesting multiform deposit that may come into production in several years from now. In addition to minerals, you have to also pay attention where these minerals are found. They are found in different geological settings. Not all of them are producing. In fact, only 4 of these settings are currently producing rare earths, the most important of which is the igneous carbonatite. Carbonatite is a rock with a lot of carbonate elements, dolomite, calcite, and so on. And the first 5 mines here mentioned by Obo, Darluzao, Maonyoping, and Weishan, Mountain Pass, and Mount Weld are actually producing mines, and the others are at the various stages of preparation or dust-off. The only peralkaline mine, peralkaline is a rock that has a lot of sodium and potassium, more than aluminum. The only one operating is this northern Russian mine in Novozero. No pegmatites currently producing. Some hydrothermal projects in various levels of gestation. The same for laterites that are found in some tropical areas. There is production from several sedimentary deposits, most important from heavy mineral sands that are just results of erosion of rock that left very high density material. That high density material is usually rutile, ilmenite, and zirconium for production of titanium and zircon, and it comes often with monazite and sometimes some other rare earth bearing material that's found in the southern Yangtze Craton in China, in South America, and parts of Africa and coastal India. Ionic adsorption clays. This happens when igneous rocks are weathered and rare earth ions are adsorbed into surface of various clays. Slightly different in China, slightly different in Brazil, but currently in production. And again, a couple of projects, especially in southern Brazil and in the Amazon, are advancing right now with some hope. But these are difficult projects often with leaching issues and problems of filtering as well. We have then other deposits that are kind of unconventional, that are a lot of hopes regarding coal seams, for example, phosphogypsum, which is a byproduct of phosphoric acid production, red mud, which is a byproduct of alumina refining, bioprocess, and even marine sediments such as Minami Torishima, southern bird island of Japan, and even IOCG, iron oxide, copper gold deposits, often mined for copper, as Olympic Dam in South Australia or the Lalatong mine in Sichuan, could be also sources of rare earths. All right, so let's come back to the cheese argument. This is a map of where the non-Chinese rare earth production stands. And so far I spoke only about mining on the left-hand side of this graph and magnets on the right-hand side. But the key to solving this issue is really in the middle. It's in the separation of rare earths. And as you'll find out, none of these countries with the exception of China, which is not on this chart, covers all the bases here. Bases from mining, through mixed feedstock, through separation of light and heavier earths, metallization to oxide, alloy production, which is a preparation for production of magnets, sintered or bonded magnets. The countries that are most advanced, ironically, are Russia, that has advanced recently, at the same time as rare earth imports from China dropped considerably. The United States has a couple of different marks here. By the way, the black marks are those that are related to the Western value chain. The red ones are those that serve the Chinese value chain. And so you find, for example, interesting in the Russian case that some of the feedstock still goes into a separation plant in Estonia. So it serves the Western value chain. On the other hand, Malaysia is kind of between two horses here and has a significant light rare earth separation facility run by an Australian company, but it's also kind of gearing up towards production of ionic clays for the Chinese market, or maybe not only for the Chinese market. Some of these countries specialize in a specific node, like Vietnam, which is a hub for metallization. These hubs are invested there by Chinese or Hong Kong or Japanese companies, or maybe soon Korean companies. In the case of Thailand, that's even investment by a Canadian company. India seems like a country that should advance, but in fact is quite behind schedule in many respects. And the only separation that we find is for those lightest rare earth, like just cerium and lanthanide. We also have those curious cases of Australia and South Africa when you see that there's mining producing for the Chinese market that refers mostly to Tronox, a heavy mineral sand producer that has a monazite byproduct that ends up in the Chinese value chain. As you might notice, the countries that are most sort of advanced manufacturing hubs like Germany, Korea, Taiwan, Japan are mostly focused on the right-hand side. Japan solves those gaps through investments in Australia, in Vietnam, or more recently in Namibia, kind of ensuring that the value chain is fully controlled, partly by private, partly by public undertakings. There is more going on. You see here in the next slide, there is a number of countries that are producing rare earths, mostly heavy mineral sands, and in one case, ionic clays, mostly for the Chinese market. Some of these really joined the peloton only recently. Madagascar is producing for both sides of the divide. And there are also a mark here of plans, mostly in Europe, but not only, to build up separation facilities outside of the kind of traditional producers such as Belgium and France. In Poland, potentially with feedstock from Malawi, and in Norway, potentially with feedstock from Norway, especially Sweden as well, an iron ore byproduct from Sweden. But all of this is still often the music of the future. So what does the West really need to rebuild it? It needs a couple of things. I mean, of course, it needs to focus on the Magnificent Seven, which are mostly the heavies and the non-lanthanides. To do this, it needs to unlock the problem of heavy rare earth separation, which is advancing. I mean, we saw the first good news from Malaysia, from Lynas operations there. The Estonian plant owned by Neo Performance, the Canadian company, is also moving in this direction, and we have some progress at different stages in Utah, Texas, Western Australia as well. But once this is up and running, we need the feedstock of heavier earths. That's not less than straightforward. The Chinese production often uses feedstock from Myanmar that might not be environmentally or socially acceptable for the Western producers. So there is definitely a need for heavy rare earth mining production. That could be partly solved if we have a better environmental processing for ionic adsorption clays, and especially for anything that includes radionuclides. And this is a problem since the 1980s in the United States and beyond, because monazite especially falls under class 7, most concentrations under class 7 logistics. And there is a problem also with storage of the waste material, for example, in Europe. So there's a lot of legislative work that has to be done to kind of smoothen a little bit the gears. Another thing that the West has to solve is the economics of oxide metallization. As I mentioned, it's very concentrated in Southeast Asia. Depending on our view of politics of Southeast Asian countries, it might be safer to have at least some of that capacity in the West. Right now, there's one important company in the UK, Less Common Metals, that focuses on this, and a couple of Japanese companies as well. And then, of course, there's the issue of high-end magnets. So those magnets that include the heavy rare earths for performance in high temperatures, with the hubs being here, really Germany and Japan, but luckily enough, some of them are also investing outside of these countries. Now, it's easy to say that maybe just the military needs will be a solution. They're a concern, but they're not a solution because of the volume. Now, just one 6 megawatt wind turbine heats up 1.7 kiloton of rare earths across different elements. I just compared it to one important defense procurement company in the US. It's probably the largest or one of the largest consumers of samarium oxide for samarium cobalt magnets. They consume about 50 tons per annum. Now, 50 tons per annum, just multiplied by the $250 per kilogram that this material sells. I mean, it's really peanuts. You cannot build an industry entirely based on the needs of defense because it's simply not sufficient. So there's the other way to incentivize it, and it's to play around with the price. And this is what the US government started doing. And let's just go through this briefly. Imagine that you have a very elastic Chinese domestic demand for that product. And for this domestic demand, there's a certain marginal cost. So if we are in an environment of perfect competition, then of course there's no mystery here where we end up with quantity and price of that product. Now, a lot of talk about Chinese manipulation refers to subsidies. That's actually not true for mined rare earths, quite the opposite. In China, you have a resource tax. It's actually cheaper to import the material than to produce it. But what does happen in China is the VAT play, because all of products that are imported or sold in China are taxed with a 13% VAT, and for downstream products such as magnets, this VAT is reimbursed, right? So that will be all fine, but unfortunately for unprocessed materials such as rare earth oxide, that's not the case. So the producer that wants to export unprocessed rare earth oxide will pay those 13% tax. That distorts trade, of course. Now, if we view the Chinese production as a monopoly, then we cannot view its price as based on just the elastic demand, but on marginal revenue, which of course will be always lower as an end monopoly than the price determined by the demand curve. So the question is, where is the Chinese price? Is this monopoly, or is it maybe a oligopoly right now with just 6 producers consolidated from dozens before? 6 producers, and 6 producers are controlled by SASAC, so the state-owned administration of control of the state-owned enterprises. And so instead, we have to actually look at the much less elastic Western demand and what it actually means in terms of pricing. So how relevant the Chinese price is for this less elastic Western demand. In fact, we'll find out that if we view the Chinese supply with the 13% VAT, then of course we end up with a very different price compared to the Chinese price, regardless whether we consider the Chinese price to be based on a monopoly or imperfect or perfect oligopolistic competition within China. To this, however, we have to visualize the Western supply and the very, very high cost of production. A lot of projects are fine at the lab level or sometimes pilot plant or demo plant, don't really work very well at a commercial scale. And so what the US government did recently is just offered a key producer in the United States subsidized a price floor. That price floor generates a completely different environment for the production. So a chunk of a production that's over-dependent on Chinese VAT incentivized or disincentivized production at an inelastic Western demand would be satisfied now potentially with that subsidized price. And we view it as a step forward and a good signal for the market, because there is no reason why the internal structure of the Chinese value chain should be reflected in the Western price. Okay, so a last word. There are certain companies that are having interesting projects here. We're not going to get into the weeds of this in the interest of time, but there are certain projects in the West that still continue to serve the Chinese market. Here they're marked in red. There are many others that are kind of dead on arrival in italics here, and some of the more interesting ones are in bold type. In processing, the same. There are kind of emerging hubs. So there are companies in the middle of the value chain that thinks of themselves as hubs, one in Utah, one in Western Australia, potentially some others in France as well. That's helpful. It would be even more helpful if they reached out more actively to the juniors to find out what kind of product they actually would need, if it's mixed carbonate, mixed chloride, mixed oxide, or concentrate, or something else. And then finally, the final question is, are we really chained to the permanent magnets based on rare earths? Not necessarily. And I think this crisis, recent crisis, is definitely advancing work on some alternatives. As I mentioned, it's over 40 years since permanent magnets based on rare earth have been the main source of magnetostatic field use in actuators and other devices. And so there are a couple of initiatives. Of course, it takes a while before any of these are commercialized. And before I just turn it over to Stuart, just one word about the book that's coming. It's entitled Mineral War. If you go to www.themineralwar.com, you can grab a free chapter, and I look forward to discussing with you issues that are related to the book or to this presentation. We discussed the Chinese issues, I think, in the last two webinars, so we're not going to get into the detail today. This book mostly treats with the reasons why we're there, why we have this Emmentaler structure of the value chain, what led to this in terms of capital market failures in policymaking, and especially the non-liberal policies of the People's Republic of China. Thank you, and it's off to Stuart.
Thanks for that, Tomasz. Always learning something new every day from you. So I'm going to be discussing the world's largest Western producer of rare earths, which started as a gold company, Lynas. They're based in Perth, Australia, where I'm from. And it was actually founded in 1983 as Yilgarn Gold, focused on gold exploration in Western Australia. It completed its IPO on the ASX in 1986, and the project it later purchased, Mount Weld, was first discovered in 1988. But for Lynas, it wasn't until 2001 that it pivoted into rare earths, and it acquired the high-grade Mount Weld rare earths project from Rio Tinto, and then sold its gold division off, and it was renamed Lynas Corporation. So on a pretty rapid timeline, Lynas undertook exploration work from drilling studies to advance the project. A pilot plant was commissioned in 2003 to validate the recovery and concentrate grade of its project, and this is a vital step to ensure the chemistry of the project works. And Lynas completed a feasibility study in March of 2005 for Mount Weld, which outlined capital expenditure of roughly 1 billion Aussie dollars or 700 million US to establish the mine. Then it raised about 75 million Aussie dollars via convertible notes and an equity placement. However, as kind of Tomasz has outlined earlier, life wasn't straightforward for Lynas. So in May of 2009, Lynas entered into an agreement with China Non-Ferrous Metal Mining Group in relation to where CNMC would invest equity and debt in Lynas to help fund the construction of its mine. However, Australia's Foreign Investment Review Board in September of 2009 blocked the proposed acquisition. And so Lynas's share price suffered from that, and Lynas had to undertake an extremely dilutive equity raising to fund the construction of Mount Weld and the processing plant in Malaysia. So in November 2009, Lynas raised 450 million Aussie dollars in a placement and a 1-for-1 rights issue at a 50% discount to last share price. And yes, that's right, you did hear me correctly. Lynas's share count more than doubled, and the cost of equity was over 50%. So why Malaysia? It might seem odd from a logistics point of view. You've got a mine in Australia, you have to ship the product to Malaysia and then send that product to your end users. But this is the mentality of mining operations out of Australia. In a country where iron ore is mined, for example, then it's shipped to China to make steel, and then Australians purchase steel back off China. So there were several factors as to why Malaysia was chosen as a location for Lynas's rare earth separation plant, but the main issues were environmental reasons and costs. So rare earth processing generates radioactive waste, and so Australia's regulatory framework at the time for radioactive materials was much stricter and more politically sensitive than Malaysia's. So approvals and community acceptance was going to take longer in Australia versus in Malaysia. And also on costs, Lynas estimated that building the plant in Malaysia would save about 40% compared to doing it in Australia. This is where labour, construction, utilities and reagent supply cost more. Malaysia also offered tax breaks to Lynas to incentivise them to invest there. So they received this pioneer status and received a 12-year tax holiday. And the industrial park where this facility is located is close to a deep water park, and it's the location of some large chemical plants. So, rare earths, as you probably can gather from this presentation, is a global business. Lynas has its mine in Australia, ships to Malaysia for separation, and then its customers are globally. And they had to enter into these 6 arrangements for offtake just to get the mine financed. So the last time that Beijing decided to use exports as a trade weapon, the prices of the affected materials rocketed 26x in just 6 months. So in 2010, China restricted export quotas of rare earths to Japan following a territorial dispute over the Senkaku and Diaoyu Islands in the East China Sea. In 2011, rare earth prices experienced a dramatic spike, primarily due to this export restriction. This surge was driven by China's near monopoly on rare earth production and its subsequent decision to limit exports, leading to concerns about supply shortages in other countries. While short-lived, this 2011 price spike prompted a shift in the industry. Many companies began exploring alternative technologies to reduce their reliance on rare earths from China and diversify their supply chains. The price volatility also led to increased investment in rare earth mining and processing outside of China. Despite the increase in prices, however, once the prices collapsed, Lynas was almost on the verge of bankruptcy in 2011. It was still ramping up production and it had significant capital needs. So Japan came to the rescue with a $250 million funding and offtake package with Sojitz Corporation and JOGMEC. Sojitz is a Japanese trading house, and JOGMEC is a Japanese government agency focused on securing strategic resources. This also anchored Japan's rare earth supply chain outside of China. And so you need to compare this to the fate of Molycorp, where it didn't have a white knight, and in 2015 filed for bankruptcy. And now we'll bring Guy back on and we can pass it on to Q&A.
All right, so thank you very much, Tomasz and Stu. So we'll move now to the Q&A portion of the program. Once again, we appreciate audience questions, so please submit yours in the audience chat on the right-hand side of your screen. And Tomasz, we'll ask, the question is the recent transaction with Molycorp that the U.S. Got involved with. How does that affect the market, and how do you see that as a player within the spectrum of rare earths that you mentioned? I know you mentioned the Mount Weld deposit, or sorry, that deposit, Molycorp deposit on the slide.
Yeah, so luckily enough, not Molycorp anymore, but MP Materials. But that's several handles to that deal, some of which, in my view, are directed at saving the company, because the company, being partly owned by Shanghai Resources, which is the third largest Chinese rare earth separator company, and one which is probably the most active overseas. Shanghai owns about 10% of MP Materials, if my memory is correct, and so the material from Mountain Pass used to transit into China. Now, transit is a mild word. There is no tolling allowed in China, so basically ended up in China in magnets until recently, and this year it's no longer possible. So if you look at sales of MP Materials, I mean, they tanked, they crashed absolutely. Luckily enough, there's a couple of other aspects of the company trying to move downstream into separation and into magnet making. This is always risky. There are not so many companies that are attempting this. And strangely enough, in China these days, there's also an attempt to for some of the state-owned enterprises to kind of consolidate the magnet making, and you see some geographic movement of magnet makers from the coastline to the areas closer to the mining centers. In the case of MP Materials, what's most important is what I mentioned in the presentation, the signal that the prices, which is simply not relevant. The Chinese prices are no longer relevant. That's the CEO of Linus, so a company that Stuart presented, who said immediately after the curbs in April that the one thing is to be a monopoly, another thing is to be a monopoly doesn't sell you anything. This is simply the internal prices in China, always somewhat opaque. So I'm not saying that they are steered, but in those couple of exchanges that there are, the disclosure is not perfect, to say the least. And in any case, the cost structure is different, and there is no reason why the West would be in a position to replicate that cost structure. Therefore, the price floor, more than anything else, and any injection of funds for MP Materials is trying to reposition its business away from its Chinese clientele to serve what it should, that is the economic security and national security, by extension, of the United States and its allies. That support for the price is an important signal, not just for this company, but for the entire sector. And that's very, very positive in my view. And I think we've seen it in the last couple of weeks in the equity market until today.
Yeah, good point. And Linus obviously has had a tremendous move as well in the last few weeks, which is great. The other question now is around magnet production facilities and developments to process and make this processing more accessible in the U.S. Are you aware of anything that's interesting out there that's near term that we should know about?
Yeah, so there's a couple of projects. You have to dissociate two types of magnet projects. So there is this obsession in the West to do everything with focus on circular economy and therefore recycling and recycled material moving back into magnets. That can be done through short loop, which does not necessarily bring the highest quality material, or through long loop, which actually brings those products back to their oxide level and just basically restarts the production of magnet. But even that needs fresh oxide input. So it's going to be difficult to solve the magnet production issue without fresh oxide input from mining and separation of new oxides. In the US, there are at least 3 advanced projects. So MP Materials is one of those that are trying. There's, of course, Vakuumschmelze from Germany, which is having a project in South Carolina, EVAC. And there's Novium in Texas. So between Texas and South Carolina, it looks to me that if they were really operating at what they promise, I don't know, maybe a year from now, that something like half of the demand that was sourced from China would be satisfied. And I think Europeans have a number of other options with some of the Hitachi, now Proterial, licensed magnet producers functioning in several countries, and Neo Performance also advancing in this direction in Estonia. So I think there's a lot happening, and we probably will end up seeing this Western value chain in a couple of years. It's sort of like a oligopolistic structure, because those that get there first will be able to take most of the market, and those that are working in some more experimental forms might be simply too late. So it's definitely it's advancing, but we're coming from a very deep hole where we were even as recently as 2024, where there's really barely any sintered production in the West, at least outside Germany and UK. And Japan.
And the MP deal, part of the funds were to be used for a stage 2 magnet facility, with the sole customer being US government.
Yeah, we're going to have time for maybe one more question. So audience, we'll give you about 20 seconds or so to type it in. Otherwise, we're going to go with what's here. Okay. Tomasz, can you shed light on the deal the U.S. government made with China to source permanent magnets from China?
So I don't have the exact details of what happened in London and wherever was their last meeting between Besant and the Chinese delegation. I think the confusion, and we talked about it before, the confusion in the beginning was that the Chinese export system does not differentiate between the codes for low-end and high-end sintered magnets with neodymium, iron, boron. That is, those that are doped with dysprosium and terbium, which are now considered dual-use elements and therefore banned. So you cannot export this anymore from China, and those that are still allowed. And so that was the big dislocation in April and May around the world, not just in the United States. In my view, I'd be extremely surprised if China rolled back on its dual-use ban for those Magnificent Seven, and therefore obtaining magnets for performance in high temperatures. And that's something that we have to solve without Chinese help.
Great. We're going to close now. Tomasz, any closing thoughts before we conclude the webinar?
From my end, thanks for tuning in. This is a very complex space. Not all rare earth projects are the same, but it's comforting to see, positive moves in the West are being taken to slowly, get back some of the supply chain. Tomasz?
The same here. I think we are at the cusp of finally something happening in the market. We've seen more interest in the equity market in this space. We understand that this is difficult to parse, the noise from the signal here. I hope that we helped you a little bit. We'll be back. We'll be talking about this in more detail in future again.
And also don't forget Tomas's upcoming book as well. You might want to purchase to put in some stockings at the end of the year.
Perfect. The Mineral War.
Well, thanks again to each and every one of you for participating and for engaging with us and for registering. This will be available as well for replay and to forward on to other friends. And thanks again to our partners at Coherra, as well as everyone who joined us. As I mentioned, there'll be a replay available following, and you can find contact information for us as well at amvestteraden.com. And also you can subscribe to learn more and to get part of our weekly newsletter, which goes out every Friday. Yeah, follow us on all the typical social channels for more information. So with that, I will bid you all adieu and say thank you very much.
Thank you.